Hello traders, Gary Wagner here. Just about 10:20 in Honolulu, 4:20 in New York. It is Wednesday, first day of June 2016, and this is the Daily Report for Gold and Silver. We do have a little bit of downside action in the precious metals markets today. We have gold currently trading off about $3 on the day, well off of the lows of 1208.20, the high 1222. So as you can see, it looks like we will settle mid-range off $3 at about 1214, 1215 on the day. Silver also trading lower on the day. As you can see, nominal change off about 2.5 cents, but it is under $16, currently at $15.94. Traders, as you know, we are currently in a holding pattern waiting for the right timing and price point to enter gold from the long side. It is my current take that we are at the tail end of this last or current correction, which in essence took gold prices from its recent high above 1306, to this intraday low that was achieved in Sunday's trading. Monday, of course, we were closed for Memorial Day here in the United States, but that low coming in at $11.99. We talked about a pretty critical price point at about 1208, and that 1208 was a fib-based, or is a fib-based number, 38% retracement, and it is a 38% retracement from the lows that occurred end of last year, 2015, beginning of this year when the market traded to that low of 1044 up to this top at 1305. And so when we do that, we get this one area at around 1205 to 1208, and that is the reason that I was looking at this particular price point as a potential area for support. Now, we're looking at a weekly chart. We can certainly see, of course, it's only a couple of days into the week, but we are currently green. Market is up for the week, lower low on the week. And as long as we close in solid positive territory, what you will see is this green candle in large forming on our weekly candles a pattern called a piercing line. And I've actually gone ahead and drawn in what that would possibly look like if we had a strong finish on the week. Of course, this is assuming that the market closes somewhere around 1230, and that would give us a piercing line. A piercing line is simply identified as after a defined downtrend. We certainly have met that criteria. You have a long red candle in which the following candle, like an engulfing bullish, opens below the price point of the close of that long candle and then closes at or above the midpoint of the prior candle, and that is a piercing line. Of course, if it completely surrounds it, meaning it actually goes into, say, 1250, you would then get an engulfing bullish, which in terms of a two-day pattern is stronger, obviously, than a piercing line. Nonetheless, both patterns are strong. Both patterns require confirmation. So another way to look at our current activity, of course, is on our daily chart. Now, this daily chart is in Japanese average format, and what we can draw in terms of observations from this chart is look at the doji-like candle that we're getting. Of course, I'll move this into a standard candlestick chart. It looks quite different, but we've got at least the makings of that pivotal V that we have been searching for and attempting to determine if it's absolutely the proper time to enter the market from the long side. And as I said, as long as this market is able to hold this support level of approximately 1208, we've got a good play here. It's simply a matter of timing. And traders, that brings us to our daily chart that I've just pulled up. This, of course, standard candlestick format. And if you recall from yesterday's show as well as Friday's show, we talked about the move down. This is where we hit the intraday low, absolutely found support at 1200. I was hoping to see it at around 1208. Nonetheless, I do believe we have solid support. Yesterday, we identified an engulfing bullish. We also talked about the fact that to trigger that engulfing bullish, we would want confirmation. A confirming candle would be a green candle, higher high, higher low. We met 2 of the 3 criteria. We absolutely have a higher low. We absolutely have a higher high. However, the market closed, although nominally lower, it did close lower, and that's what's giving us this red-bodied candle. And that is also what has caused us to kind of hold off from the trade. But we have seen this type of scenario play out before, and I point to an example right in here that occurred roughly at the beginning of April. You get a very, very solid engulfing bullish. That's these 2 candles right here. And then the following day, you absolutely do not receive that kind of confirming candle because you get that red candle. And in this case, the red candle did have a higher low, had a lower high also, but then you got the spike on the following day. And so that's what I want to be cautiously aware of, to see if we get that runaway spike on the following day. And of course, any kind of move over 1228, as far as I'm concerned, could in fact be signaling a breakout. Traders, we are absolutely still in a holding pattern, but if we get a strong move tomorrow, I will look to initiate and trigger a buy in gold. And traders, lastly, I do want to look at our current daily chart with our Elliott wave count and show you an alternate count that is quite possible. There's absolutely no doubt that ever since this market really began to track higher, first hitting this high at roughly 1260, then at 1288 up here, and then 1306 up here, we've had some sort of an irregular ABC. And one possible count could be that we've got our A, our B, and this irregular C coming to some sort of conclusion, that really capping off a wave 2. Reason, of course, it is a irregular, as your B is above the high of this one. And so that being said, if that's the case, we've probably seen a 1, a 2, a 3. We're probably currently in our 4. We could, in fact, then get a dip because we would probably have a 5 count, concluding the C and the 2, and then we would go into a wave 3. It is a possible scenario in terms of an Elliott wave count, and I certainly wanted to bring that to your attention. As I said, we are in a holding pattern. We want to see if the market's going to break. If, in fact, it does break, we want to see where the market can go, because we might see one more dip if this model here holds some weight. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.